All right, so look, everybody talks about teaching currency trading and how great it is, and you got to read this book and you got to do that. Look, currency trading is simple to do. It's not complicated. It becomes complicated when you try to read every fucking book out there and the videos and all the other stuff. Here's currency trading, okay? I've got price, and it's doing this. And I'm at this point here. Where's price going to go? I'm talking about, this is short-term trading, not the longer-term stuff, okay? This is short-term. This is speculation. Where's the price going to go? Is the price going to go down? Yeah, it could. Is it going to stay flat? It could. So it could go like this. It could go down. There's a 33% chance that that's going to happen. It could flatline, and there's a 33% chance that could happen. Or it could go up, and there's a 33% chance it could go up. Well, which direction is it going to go? Look, if you did a 200 moving average or whatever, the moving average would be going up. So you eliminate these two things. I saved 67% of my decision process that says which direction is the highest probability that the price is going to move. Okay, that's number one. What direction is the highest probability it's going to move? You got it. Now comes the setup. First of all, how do I determine whether this is worth getting in a trade at this point? I got to look at structure. I got to see that structure somewhere back off on the left is offering me a profit target. Okay, that profit target from here to there is, let's say, 25 pips. Is 25 pips worth taking? Well, let's look at the probability of the wave fluctuations of this price stuff that's been going on. You know, we all know about the sinusoidal waves that are in science. It's a sine wave. And so this is kind of like a sine wave with damped oscillations and higher amplitudes and a little bit wider periodicity. But you can create this wave by a whole bunch of these. So let's just say this is a wave. This is like an ocean wave. Water comes rolling this way, and it crashes, and then it comes rolling up. That's all we're doing here. So we've gone up, we've kind of retraced, and we've gone back up again. And we're looking to go this final 25 pips, and it's going to rise. Okay, so we've got a 25 pip profit target. That's worth going. We have a high probability that the price is going to go up. What's our risk? In other words, where do we say that it's crazy to take the risk? Well, if I've got a 25 pip profit target and a 5 pip risk, what's the probability that with all this fluctuation going on that this isn't going to roll over, go 5 pips, and then continue on to the 25 pip point? Okay, so where does it appear that you would be wrong from a structural standpoint in the past of where price is? It would be right here. So this distance here, let's say that's 30 pips. Well, that's a really big risk to take for the 25 pip reward. But we would know that if we hit 30 pips, our decision process in the whole game is incorrect. So let's just say we're going to shoot for 25 pips, but if it rolls around and it goes 5 or 8 pips or 10 pips, we'll get out of the trade. Now, if you're on long-term trades, let's say you're playing the daily chart, and you may get 1 or 2 setups a month, maybe. Okay, so you're only going to trade, I don't know, 1 or 2. You might get 1 trade a week, let's say, on a daily chart. So you have maybe 40 opportunities during the year that you're going to make a trade. How can you learn by doing something 40 times? Are you going to learn how to play the guitar, practicing the scale 40 times? Are you going to learn how to fix your car by pulling the engine apart 40 times? Are you going to learn anything in 40 times? You're not going to learn shit. On a 1-minute chart or a 5-minute chart, there's 12 5-minute periods in an hour. That gives me the opportunity to judge 12 times an hour whether there's an opportunity to trade or not. And I can find out. If I'm wrong, I can find that out real quick. And here's the kick to the thing. By trading on the short-term time frames, if you know what you're doing, you can have a win-to-loss ratio of 7 out of 10. So you're going to lose 3 for every 7 that you win. So if I don't make the 25 pips, let's say I just make half of that. I make 10 pips and I do that 7 times. I get 70 pips, yeah? If I take a 10 pip risk and I do that 3 times, or I take a 15 pip risk 3 times, I've got 45 pips. So if I do that 10 times, I'm going to make 45 minus 70. I'm going to make 30 pips over 10 trades. And I can make 10 trades in a day, 2 days, a week. And I make 30 pips. Well, if I make 30 pips, let's just say that's on a $1,000 bank. I make 30 pips. And people making this stuff so complicated. It's not complicated. It's simple. But there are some rules that you have to follow. But the rules are not involved in determining the setups and risk-reward ratios and all that other shit. The structure is different. And I had to learn that the hard way. It took me, I don't know, I lost $50,000 over a 3-year period of time in order from a real account. Jesus, I was a trading genius when I was on a simulated account. I had 2 years, I had 4 years of simulated account trading. I was averaging 15% a month over 8 and 10 month periods of time. I mean, it wouldn't do that over a full 10 months. I'd get 15 or 20% over a 2 or 3 month period of time, and I'd reload the account and I'd see if I could do it again. In doubling an account, double an account in 3 or 4 months, 5 months, and I'd set it to 0. I'd start it over again, see if I could redouble it. I was a hero. But when I got into trading live, there wasn't anybody out there. All the information is out there. Oh, okay, I'm not going to tell you, I'm never going to tell you anything that's new that you couldn't find on your own. I would tell you something and you'll go, oh, I saw that on the web for free. Yeah, but did you fucking understand how important it was amidst all the other clutter and the shit that was out there? The only way you're going to learn that is to lose a whole lot of money. Now, the market can remain irrational longer than you can become solvent. That's a fact. I found that out myself. Unless you're smart. I wasn't smart. I started with a $40,000 account. I shouldn't have. But I did. If I would have started with a $1,000 account, instead of losing $40,000, I could have lost maybe $3,000 and gone, wow, this isn't working out. Why am I not successful? Reading all the books and watching hundreds of videos, taking courses, and listening to all these people about how to trade. Look, I became a millionaire trading, but it was in real estate. That's a long-term trade. Look, I've lost $1 million twice in my life and made it back each time. So I think I know a little bit about money and how you make money and all that other stuff. I retired not because of my job as a computer engineer, but because of my investing ability. All the $100,000 a year income for many years, where $100,000 was quite a bit of money in the area. I mean, if you're living in Silicon Valley, you can't, you make $100,000, you can't even afford an apartment. But where I lived, relatively speaking, it was a lot of money. But none of that money enabled me to retire. I mean, I might have had a few $100,000 more in my IRA than I have by doing compensation from that. But all my money went, all my investment money went into real estate. And I compounded that. I found this stuff in 2007 and started studying. Made my first live trade in 2012. Thought I was a fucking hero and started in 2017 with a live account. Now you think that with all my experience and all that training and all that background and 4 years of simulated training that I could do the live trading, and I couldn't because there were certain rules of the game that I didn't know. Well, I take that back. I knew them, but I couldn't identify them. Nobody was there to poke me on the shoulder and say, hey, dumbass, don't do that. So this is all you need to learn how to do. But you need to learn those other rules. The other rules have to do with what the big boys are doing. This is not your and my game. The retail traders are 15% of the $5 trillion a day global foreign currency market. The big boys, the banks, the institutions, the hedge funds, all those guys, those are the big boys. Some guy comes into the market with a $5 billion order for engine parts to go from England to Spain, and they got to have liquidity. They can't just go in there with the Chase Bank can't just go in there with a $5 billion order. Oh, we want to sell, 3 billion euros and buy Spanish currency. It would kill the market. So they have to dribble the orders in. They have to look for opportunities. If you don't know what they're doing, and it isn't so much what they're doing, because you don't know what they're going to do. It doesn't matter if you know what they're going to do. It's when they do it. And you can't even determine that. But you're going to figure out what's the commerce behind the movement of the currency price. What's the reason for that? If you were going to trade commodities, you wouldn't trade sugar just as a squiggle on the thing. You'd say, well, sugar, the price of sugar is not determined by the farmer. The price of sugar is determined by my wife, who goes to the store and says, that sugar is too expensive. I'm not going to buy that today. Because that's what the market is. The market says and puts that price on there. So if you don't understand what the reason for the currency market is, you can't understand why the folks who are the dogs in this thing are wagging us the tail. You can't figure that out. So you're going to have to do some research on that. And you trust me on this. I've read hundreds of books. I've watched more videos than you can possibly imagine. And I've done it since 2007. And the day I'm making this video is 2020. And so, I mean, have you got that much time that you want to screw around with this shit to try to figure out what's going on and try to learn it for yourself? You don't have to learn it from me. I'm too expensive for you anyway, because I don't want to teach. I got stuff to do. I'm going to do this on the internet so that you can be aware that you have a lot of work to do and you got a lot of stuff to learn. And no matter how much you cram your little craniums with information, unless you have a mentor, someone to say, this piece is important, and this piece is important, and this piece is important, and the rest of it is bullshit, you're not going to be successful. What you'll do is you'll run through your cash. And if you don't have a lot of cash or you're over anxious, when you run out of that cash, you won't have the money to replace it. You run through your $10,000 playing your full lot. $10,000 is a lot of money. I don't give a shit who you are. You run through $10,000 screwing around with this stuff, and where are you going to get the next $10,000? $10,000 is a lot of money. If you're making a couple of $100,000 a year family income, you can probably piss off 10 grand. But if you're just coming out of college, if you're a millennial or a Gen Xer, and you see the terrible plight that folks 50 and above have, they're not ready to retire. They can't even get there. They're out of fucking time. You see their problems. What are they doing about it? They can't do anything. They're out of time. They've got 10 more years to work at their job. They haven't been able to save any money in the 25 or 30 years that they've worked at their fucking job. What are they going to do in the next 10 years? They're not going to do shit. They're not going to be able to put 10,000 bucks into this without some reasonable probability of success. And if you're 30 years old and you're getting started, you're paying school loans, where the hell are you going to come up with another $10,000? You know, when I teach somebody how to trade, my mandate is the course is like a 3-month period of time that I work with the student. And you work with $1,000 simulated account. And you do that until you can accomplish certain things. And then you go into the market. I don't care whether you're a multimillionaire. You go into the market and you start with $1,000 because guaranteed you're going to lose that real money the first time you go in there because it's the real market. What you're doing and playing in the simulated market or watching videos is fantasy land. And if you don't believe me, put $10,000 on the line and go do that. And if you make the money, God love you. Good luck. Sometimes it happens. But if you really look at the videos of the folks who are successful traders, and it's very difficult to determine who's shitting you and who's real, but if you look at the videos that are being produced by successful traders, most of them will tell you that they went broke 3 or 4 times before they figured it out. Now, if you don't have the resources to come back from going broke 3 or 4 times, you better make sure that when you go in with $1,000. So you're out 3 or 4,000 bucks, and not 40 or 50 or 60,000 like a lot of us who have gone out there and started scrambled through this shit on our own. And believe me, we're not geniuses. You keep banging your head against the wall, and eventually the wall breaks. You got to figure out there's a stud between the walls and quit hitting your head against the place where the stud's at. And hit the wall where there's no stud. That's what the mentor would teach you. Okay? And all I'm trying to convince you of is quit reading the fucking books and watching the videos and all that other kind of crap. Find somebody that you trust. Take the knowledge and the information and the experience in the currency market that you have and work with a mentor so they can go through the clutter and show you what you already know is okay. It's just that you're trying to select stuff from too much information. The whole process of learning currency trading is to reduce the amount of information, to reduce the decision process. My course is basically a process of taking all the information that's out there and dribbling it all away until you have 1 or 2 choices to make. So you make your choice. If that doesn't work out, that's great. You go to the other choice because that was the second best one. If you have all these indicators and all these systems and all this other kind of crap, if you know anything about permutations and combinations, if you have 4, I forget what it is. I haven't done this stuff in a long time. But I think if you have 4 combinations, it has like 312 different permutations. Don't quote me on that, but it's a big number. Okay, just with 4. 4 or 5, I think. 300. So how do you make a decision with all that stuff? First of all, you got to find out what's the real rule. What are the base real rules that you need to know so that you can say, oh, okay, I'm here at this rule. What are my 2 options when I'm faced with this rule? Oh, I could go this way or I could go to door B. Oh, okay, I'll go to door A because from a probabilistic standpoint and analysis that I just did here, that's probably the best direction in this particular case. That's how you do it. That's how you do currency trading. My name is Peter Rose. If you want to chat or whatever, get in contact with me and I'd be happy to chat with you. Have a great day. Have a great trading day and a great life.